Quantum Group is a fintech and cybersecurity investment incubator covering regulated fintech, specialist security, and media and communications. It's looking to list on the main board of the London Stock Exchange in 2026. I'm delighted to be joined by the founder, Peter Malmstrom, who is also head of M&A, and James Radford, who's head of very new incubatory Volopa. So, Peter, the aim is to list in quarter 3 of next year, so it seems so far away. So as you set out your stall for potential investors, how long has Quantum Group been established, and what problems is your business solving in terms of real world application?
Okay, well, the business was founded by my partner and I, Floyd Woodrow being my partner, back in 2016, and really brought our interest in the security world and aligned it with our new interest in fintech. So in 2016, Quantum was formed, which had a fintech division, of which the core is Volopa. Latterly, a company called Verve, which is cashback and rewards, so good synergy there. And on the other side, very much a more traditional security offering, combined now with enhanced cybersecurity. So that's how long the group's been around. And since that time, we've seen steady growth. And certainly now, as you rightly point out, we are focused on the IPO that the group was built really to achieve back in 2016.
And before I come to James and Volopa, is it a prerequisite that you only invest in companies that start with the letter V?
Well, I think that was really a statement that we wanted to make to the market, that we aren't a VC. We do not buy little bits of companies. We tend to acquire all of the company, support, nurture, and build it. So effectively, rather than have a sort of conglomerate of names in the early days to differentiate us from a VC, we made the statement, we own and support all of these companies, and therefore we aligned them by starting them all with a V. Since we acquired Forensic Control recently, that went out the window, because I think we're now a mature group. People understand exactly where we're coming from, hopefully where we're going. So the need to align all of the subsidiaries with a V falls away.
Okay, which brings me to you, James. Volopa, and I want to know about the relationship you have with Quantum, bearing in mind it's day 2 for you. So how will this investment or this relationship help your business blossom? Is it just the finance element, or is it an active one in terms of strategy with Quantum?
I think there's a number of things that I was attracted to come to Volopa and also to have joined the board of Quantum. And I think it goes through not only the investment, which is great, and to have a parent that's willing to invest in the company takes a lot of pressure off of us as a company, but also the group as a culture. So the culture of the group helps us drive forward. And more importantly, the group has its own COO office, if you like. So for me, to have a core that helps us with compliance, control, operations, allows us as an individual organization to focus on growth and our customers. And so whilst all of the head office functions, if you like, support us, the culture supports us. It allows us to focus on our customers, to get the growth in, and then once we've got customers on board, to make sure we manage them appropriately. And just an indication of that in terms of the growth, if you look at the growth that I can't take responsibility for, just in the last 12 months, the international payments have grown 4 times. Payments themselves have grown 3.5 times. Our card usage is up 71%. The spend has doubled. So there's plenty of growth there already. My job is to supercharge that and to take it to the next level. So whilst we're focusing on our customers and that growth, the group give us great culture, take care of all of the functions that normally would sometimes get in the way of growing a business and taking care of the customers. So that it helps in many different ways, not just in terms of providing money.
So what does Volopa do, and who are your customers? Could I be one of your customers?
So Volopa does 2 core things. One is it concentrates on international payments, and the other, it's an expense management tool that allows companies to travel and take expenses in multiple currencies at very low cost. But more importantly, it's for an SME and for a corporate customer, which is our main focus. First of all, it just works. It's got great tech. It looks after its customers. But what we found is more important when it doesn't work. And when it doesn't work, sometimes you're split between the big corporates and the big banks, looking after corporate customers who, quite frankly, are still in the business of having quite opaque charges, cost SMEs a lot of money. So we bring that transparency to the table. But then you've got the other end, which is the fintechs and the fintech startups. And you'd have heard a number of them growing in the past 3 to 5 years. And actually the servicing of SMEs is either done by robots or it's self-serve. And actually what we bring is a really good blend of what I would call old school servicing, where you have dedicated account manager, someone to talk to if something goes wrong, but less opaque transactional costs. So we're bringing those two things together. And that's why I think that that's why I know people come to us and will continue to come to us, because what they're looking for is transparent pricing and someone to talk to if it doesn't quite work.
Okay, and before I return to Peter, I just want to know, is Volopa authorized? Is the business safeguarded? I'm thinking about firewalls and cyber security or cyber insecurity.
Absolutely, regulated by the FCA. We have industry standards, but also as part of the group. And one thing that I didn't add was that Valkyrie, as one of our sister companies, adds a dimension of security to our business. So absolutely, we are regulated by the FCA and absolutely secure to industry standards.
So Peter, this is your brainchild, the parent company. I'm just, to be crude, what's the exit strategy? No offense, I know it's only your second day.
No, I mean, I think, to be honest with you, Sarah, the way that the things that Floyd and I have got right is, one, we have always employed people that are infinitely smarter than ourselves. And the other thing that we've definitely got right, which James touched on, is we've created an environment in our subsidiary companies where we can take these really highly skilled specialist individuals and put them into an environment where they can be, as Floyd puts it, the best versions of themselves. Because as James commented on, we take a lot of the heavy lifting off compliance, centralized accounting, and more importantly, fundraising, because we recognize that really particularly tech firms get crushed in the early stages with the requirement to keep funding whilst they're scaling. And that tends to take their senior people away from what they should be doing, which is focused on driving and scaling the business. So that really is what has driven our growth, if you like, the fact that we've been able to not only attract but retain world-class people and put them in an environment where they can be focused on what they do best to scale the business. And that really, I think, has been the key driver to some of the growth that James has touched on, that we're seeing in particular in Volopa, but we're seeing across the entire group.
But Peter, that's the nurturing element. I'm just wondering when you can release them like fledglings. So, the exit strategy, do you build up, do you empower? And is the idea of the listings so that you can bring all these companies to market under the parent group and then perhaps spin them off?
Yeah, well, I mean, certainly the listing is a stepping stone to further growth. A lot of, Sarah, they say if you love something, you have to let it go. I mean, ultimately, this group is being built for the benefit of the shareholders, but also really to leave an enduring legacy of success beyond certainly Floyd and I as founders, but also the key management team, all of which are vested and have involvement in the success of the firm. And really, we see the float as a stepping stone to further growth, because we don't term it as an exit. None of the key management team are looking to exit. They are looking to stick and build for the future, which I think is why the London Stock Exchange are keen for us to float. The date that you mentioned being Q3 2026, that date has been focused on for several reasons. A, because of our trajectory and our growth, our desire to go to market debt-free, profitable, and with a near vertical growth trajectory. We think that that is the optimal time to go to market, and the stock exchange, looking at our projections, looking at the size of our company, feel that we could be one of these big fintech success stories to not only float at a robust figure, as indicated by the valuations that are coming out on us, but also to sustain that growth and see significant uplift in years 2 and 3 post-float. So that's our strategy for exit, but also generating further growth.
Okay, because I just wondered what milestones need to be achieved before you list in Q3 2026, or is there a lot of pressure on James's shoulders for him to achieve milestones within the subsidiary business?
Well, look, I mean, I think all of our executives have got their pedal to the metal. All of them have got proven track record of success, no more so than James. James came to us with experience, having been the UK CEO of Revolut, and certainly demonstrated there, together with the management team, absolutely spectacular growth. Revolut have set the benchmark so high, but that is great for the rest of us because, as James touched on, our fintech is slightly different to their fintech. Our approach is combining cutting-edge tech with old-school customer service, in stark contrast to the banks that don't have the tech, and if you like, digital competitors like Starling and Monzo that don't have the kind of ingrained customer service. So yes, all of our executives are focused on growth, and clearly one of the reasons why Q3 2023, the 2026 has been picked is because of the accounting cycle and the fact that that is the time that we will have gone through break even and into profitability, which again is a key factor for our investors. De-risk the proposition. Fintechs that are actually in profit within a stone's throw of a listing are fairly few and far between, particularly here in the UK.
Because I was going to be devil's advocate there. I was just going to ask you, what is the point of a listing? I mean, why isn't bank borrowing or debt a preferable option?
Well, yeah, that's a very good point. And actually, the listing, particularly with the new stock exchange rules, they have changed the rules to allow companies to actually float with 10% of the company in free float rather than previously 25%. Now, all of our shareholders are dilution averse, but they recognize that the value of a listing, I mean, if we were to list, and the projections suggest somewhere around about the billion mark, with 10% of in issue, that would bring 100 million of cash onto our balance sheet with no debt, with no VCs to repay, and effectively committed and focused shareholders are looking at growth. Of course, the float gives liquidity in the stock, which all of our investors and shareholders want, but it gives us access to things like listed bonds and debt instruments, which actually and paradoxically prevent further dilution. So really, it's a mechanism to be able to increase our options, not just for the company, but also for the shareholders.
One more question for you, Peter, before I give the final word to James. And looking at the macroeconomic environment, if all your ducks were in alignment, would you list now, or would you wait for tariff threats to diminish, or are you politically and economically agnostic and the business is shielded from all of those headwinds?
Well, no, that's a good question. And certainly, if you look at the political landscape and the economic landscape, London has been traditionally depressed. But I think that despite the challenges of Trump being in the White House at the same time that we have a Labour government led by Keir Starmer and a relatively inexperienced team, no matter where your political leaning, some, I think, mistakes have been made on the assumption that Trump wouldn't get in, and those have come back to haunt us. But having said that, our businesses are resilient and they are designed to optimize functionality in a company and save costs. So enhanced security in our security division always comes. You need more security when you're in an economic downturn or when there are times of uncertainty and crisis. The flip side of that is that the streamlining in our two core fintech businesses save companies cost and save them time. And both of those are key drivers in times of uncertainty and economic downturn. And absolutely, cash back and rewards become more central to people's focus in times of trouble. So we are agnostic, not that we're blissfully unaware of the potential economic roller coaster, but at the end of the day, because it's strategic, we think London is the market for us. We are a British company looking to passport globally and offer services to a global customer base, but based here in the UK. And if you look at NASDAQ, companies tend to, particularly foreign companies, float on NASDAQ. And I think the statistics say there's not a single foreign company that floated on NASDAQ that share price is more today than it was at the time that it floated. Whereas here in London, we may be starting from a lower base, but I think our growth trajectory will hopefully provide a resounding London success story. And if we can help regenerate and rekindle interest in the London market and be a forerunner digital player in that space, alongside companies with stratospheric performance like Revolut, well, that will certainly put Quantum very much on not just the UK map, but the global map.
Very good. Now, James, as you and I talk, the recording of this interview, it is day 2 for you in Volopa. So what do the next 3 months look like in terms of where you want to take the business?
It's a good question. So I think it's about injecting a sense of urgency, but also bringing people together. I'm very aware, and whether it be my experience in some of the larger places I've worked, American Express, Citigroup, Lloyds, or the smaller startups, actually, what I've learned in all of those is that there's 3 groups that are important: your shareholders, your customers, and your employees. And the one thing they've all got in common is a choice. You don't have to work here, you don't have to invest in us, and you don't have to be a customer of ours. And actually, it's how do you, in the next 30, 60, 90 days, make sure there's a plan to make sure that, A, the employees feel that sense of the journey in front of them, supported by the culture we have at Quantum and into Volopa. The shareholders see what value we're building for them. And importantly, getting the message out to our customers, you know, that we are going to give that transparent pricing. We do have the servicing you're looking for, and we've got a great product. And so it's maintaining those 3 independent groups, making sure they all want to be part of the future. And that's building a plan and executing it at pace. So that's what I'll be doing.
Excellent. James Radford, Head of Volopa, and Peter Malmstrom, co-founder of Quantum Group. Thank you very much indeed for joining us.
Thank you, Sarah.
Thank you, Sarah. Thank you.